Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit each day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk factors for the upcoming day for the key U.S. financial markets. It's currently 7:30 a.m. Central Time, and I'm recording this in preparation for the market day of December the 30th, 2014. So let's dive into the key highlights of today's market report. Really no change in our market trend intermediate term phase opinion. We're still at phase 3, bull flags, bull flats. We're looking for higher highs and higher lows, and this phase can last for a number of weeks. We certainly think that with the rising VIX at a 50-day SPX high, which occurred on Monday, this suggests we could be ripe for a pullback, and indeed, the question is really mostly about timing. We've seen some topping action in recent days, and we certainly are ripe for a pullback. The seasonality for December has come to an end, and certainly with the last day of the year, our seasonality turns decidedly bearish, so be on the watch out for that on Wednesday. As to whether the pullback that might occur on Wednesday as people take their losses and take advantage of the tax situation to sell their losses to offset their winners during 2014, whether that pullback might be it or there might be something more pronounced setting up in the days to come will be seen. From our larger picture, though, we do look for a portfolio trader posture is still under some risk with an uptrend under pressure. No change there. But we do continue to have this divergence because of that uptrend under pressure against our active trader market posture, which still has the OK for intermediate term bullish trades, both intermediate and short term bullish trades being in the OK condition. So just kind of keep in mind the fact that we have some of these risk factors still under play, and that is no change from yesterday. We also have no change from yesterday in terms of position sizing opinions. The portfolio trader position sizing says 0 to 25 because of the uptrend under pressure, whereas from a volatility standpoint, we are in the sweet spot 12 to 18, and that would call for a 75 to 100% of full position size on any new trades. From our market timing, short term, 1-day outlook slightly bullish, 3-day outlook is also slightly bullish, but again, that rising VIX with a 50-day high suggests an opportunity for a pullback is at hand at some point. Our 2-week outlook is still bullish, so all the signs is that any pullback would be just that, a pullback, not a full-fledged rollover correction kind of situation is the best consensus opinion that seems to be available at this time. On our market forecast, very bullish, and indeed all 4 indexes are now in the upper zone. So this is a very bullish condition, and again, if we'd not had the seasonality of low volume, we probably would have had our hedge status absolutely drop to a 0, more in line with where our market posture is. We are still at break level, yellow light kind of threshold level 1 conditions. We've had a lot of the warning signs that have been removed, but because of this uptrend under pressure, because of the lack of volume, positive bullish volume, this still exists. From a number of volatility standpoints, everything is green lights. Nothing has been flashing. We did have rise in the VIX yesterday, and so that is the one small warning in the short term. And again, this is not a change from yesterday, but we still have a situation where the NDX has not put in a higher high, and normally we look for the NDX to drive strong bullish market trends, so this is a warning sign. A lot of distribution days in play. NASDAQ has 7 on our window. S&P has 5, including take note, NASDAQ has had 5 distribution days in the month of December. The Russell is flashing a flushing signal and amateur up bars, so that would say that the movement up on the Russell has been on small volume, small lots, and by amateurs and not by professional or institutional buyers. So that is a warning sign to take into account. VIX phase, we continue to be overall intermediate term VIX down, though this last day was a higher VIX. So short term is up, intermediate term is down. And let's see, other things of note today. Note that from our market posture, really no change. Energy continues to be the one sector that has significant weakness, though it has had in the short term improvement. On our percent change, we still see utilities, healthcare, consumer discretionary being our strongest performers, energy still being the weakest performer. So really much the same situation there. Our strongest industry groups continue to be the same players: retail, railroads, transportation, internet, and healthcare, making out the top 5. And you'll note that our friends at Shadow Trader see that no sectors nor the broad market are overbought or oversold at this time. And let's go to our morning report. Again, very much the situation as we had the day before. Slight weakness in the overnight across all the key futures indexes. Did not have the strength that we had had earlier with crude oil. Actually, it was down 0.48, so somewhat weak, but not as dramatic as we had had the day before. Gold was the primary mover in the futures markets for this last evening, up 1.38%. Now, we do have a bit more activity on the overseas markets. Hang Seng down 1.14. Japan, Nikkei was down 1.57. The FTSE in the United Kingdom was down 1.05, and the DAX in Germany was down right at 1%. You do have a lot more activity from the macroeconomic reports to come into play for today. The big one, red flag, being the consumer confidence. And then tonight, China will have manufacturing PMI. So keep that into mind. And then going into tomorrow, because of the holiday, we will have unemployment claims on Wednesday morning instead of Thursday morning this week. You also have a number of orange flag reports: Chicago PMI, pending home sales, crude oil inventories, all taking place on Wednesday morning. And then after our market closes, Wednesday night will be China PMI manufacturing. So let's see, the one we had on Tuesday night, HSBC final manufacturing PMI, and then another manufacturing report coming out of China on Wednesday night, it would seem to be called for on the schedule. From our volatility standpoint, the one thing that I would draw attention to, yesterday was quite a bit quieter, and we had zeros across the board here. But notice this right here. We have had a little bit of an uptick in both the NASDAQ as well as the Dow markets, with a little bit more implied volatility coming into play. So this may be a kind of a leading edge signal that something is stirring in the undermarket and about to show a bit more volatility coming back into the marketplace. Obviously, seasonality, while we normally see after the New Year's all the market participants come into town and hit the markets again, with this particular holiday being on a Thursday, best guess would be that Friday would continue to be small volume, small range day, perhaps more range and volume than what we've had in the early part of the week, as there'll be some activity due to the first day of the month seasonality. You have a lot of 401k money that will come in, will have to be invested. That happens on the 1st and the 15th generally, maybe the 16th. And so that might be driving some activity. There'll be some people who will jumping to reset positions that they've closed out of, but a lot of volume and activity will likely come back into play on Monday after the New Year's holiday weekend. So and let's see here. There we go. And get some of the stuff out of your way here. Sorry about that. Obviously, we always welcome your coming back to us on our social media platforms, the blog. We post at least 4 times a day to the blog. So take a look at that, and you'll see a number, I think, helpful trader activities taking place and being communicated in the blog. Of course, you can follow us on Twitter, Facebook, StockTwit, Scootify, or here at the YouTube channel. And we certainly would appreciate your liking us on any of those platforms. If you'd like more information about any free trials to any of our rooms, obviously 2-week free trials are available. Just go to the website, and questions may be sent to support@falconglobaltraders.com. You have your disclaimer. If you'd like to read this in depth, just hit the pause button and read to your heart's delight. That would make the lawyers very happy. And as always, we thank you for listening to us, and your feedback and suggestions are always welcome. Please just send us a message at support@falconglobaltraders.com. Thank you and good trading.